On a runaway train. Are we on a runaway train let's see what that looks like, right? So the question is this: as far as the stock market is concerned, and as far as the economy is concerned, I'm going to show you why we are on a runaway train. And I'm not so sure the conductor is, but that is not a good sign, okay? So let me give you a couple of reasons why I think that is, and where do we stand, first of all. Well, first of all, let's talk about the economy. How is the economy doing right now? How does it feel to you? Right now, it would appear that GDP growth is expected at 2.5%. Inflation, they are targeting 2.5%. They are concerned about the tariffs. But yet, at the same time, you've got the Treasury at 4.5%. So you cannot have 4.5% debt, 2.5% growth for too long, right? It doesn't work out. So what you've got yourself is a situation where the economy is on a tailspin. We haven't seen the hard number yet. We're only looking at the soft numbers. Soft numbers are very, very soft. Now, in terms of the hard number for the economy, what have we seen recently? Well, the payroll that came out not too long ago seems to indicate some weakness. Basically, they were expecting 110. Last month was 60,000, and now it only increased by 37,000. So payroll numbers are very weak. Now, we'll see what the numbers look like today, because today, let me see, we are expecting initial claims at 8:30. 8:30 for you, it's I'm in Europe right now, but basically it would appear that at 8:30 you're getting initial claims, continuing claims. The market is very shaky. Let's see what happens with that. Okay, let's see what happens with that, and then we'll get a better feel. But right now, obviously, when Trump heard about the payroll yesterday, what did he do? Right? He went out and he told basically and he basically told the Federal Reserve to lower rates. You know, the numbers, the economic numbers for unemployment are not that. I mean, we don't have the numbers yet. We'll see what it looks like. But payroll at 37,000 versus 110. I don't know if you have a job right now, if you're going to lose your job. It's not happening, but we have some concern as far as this particular hard data. Now, what you're going to see very soon is the amount of the tariffs. You're going to see the tariffs start to kick in. I mean, it's already kicking in, but you haven't seen it in the numbers yet, right? You haven't seen the fact that some companies might take it in the chin in order for you not have to pay more for certain items. But there's so much pain that they could take. After a while, you're going to have to pay up if you want that wine, right? You're willing to spend $15 versus 10. It's going to be it's going more expensive. So yes, can you hear me? Everything okay? Great games. Now, what else is going on? The next thing we should hear. I mean, I'm assuming everyone heard that. I'm assuming that everyone heard the fact that Elon Musk yesterday said that he did not like the bill because he thought that the bill was a very bad bill. It was a disgusting bill. He said a bunch of things, and people got upset with him. And why would you get upset at Elon Musk? You may like the guy, you may not like him, but the fact is that he is a specialist when it comes to saving money. Okay, so I'm just making sure I'm live here. Okay, I am live. Okay, so you should listen to Elon Musk because I don't care if you like the guy or not. The point is that the job that he has done with Tesla in terms of the ability to really clean up the company and save money, it was a, I mean, it was an incredible feat. Okay, now he wanted to do the same thing with Doge, and obviously they told him, you know what, what the heck are you doing? That's enough. You're actually going to do it. We don't. So you know, they killed his stock and everything else. So he's now back at Tesla. But the point is, my point with Elon Musk is that he is a anal retentive kind of guy. He slept on his floor to make things done. Again, you may or may not like what he wanted to do, but he is a detailed man. And when the detailed man tells you that this bill is a horrible, disgusting thing, you could understand why. Now, why is he doing that? Well, because basically, on one hand, for the tax bill that's coming through, I mean, it already went through the Congress, and that's going to go to the Senate. But basically, what they want to do is they want to lower your taxes. That's good, right? You lower the taxes, right? I don't want to pay taxes. Great. But how are we paying for that? Well, what we're going to do is we're going to cut a few things here and there into Medicaid, some window dressing, really, not the real hard stuff. But then to pay for that, we're going to we're going to borrow more money. We're going to borrow another $4 trillion. Now, these people are not idiots, right? They know, and I know, that you could count. And you're saying we already owe $37 trillion. You're telling me we're going to add another four now. Yeah, but the idea is, okay, the idea is to say that by cutting your taxes, you're going to spend more money, and that's going to push the economy forward because you have more money in your pocket if you're willing to spend it. Is that going to be the case? We shall see. Now, if you're not going to do it, then that's going to be a problem because you're not going to have enough. So the point is, what we're trying to do here is we're trying to have you, the U.S. consumers, spend more money. We shall see. We shall see. But the point is, it's going to cost you $4 trillion. And now, why is it that he doesn't like that? Because he's a stupid man, and you either. I mean, how much is it going to cost this additional? Well, that's going to cost you right now. The 10-year is at $4.5 trillion. Now, $4.5 trillion is a lot of money, especially if you have to pay 4.5%. Now, we're not paying 4.5% because most of the debt was financed at very cheap rates, but a lot of that is coming home to roost right now. That means that $9 trillion. The reason I'm telling all this because you need to be very careful. We may be, and like I said, I'm going to tell you why we are on a runaway train. And the runaway train that's actually going is obviously the debt is a runaway train on its own, right? Now you could say, well, let's stop the train. Let's stop Trump. Well, what is he doing all these things? Well, you have to think about, and I'll tell you in a few minutes what he's thinking about. But basically, right now, we have 4.5% on at some point on $37 trillion. Now we are refinancing $9 trillion. $9 trillion in the first 6 months of the year, about six. Who is going to help us refinance? Right? Well, I will tell you, not a good sign, that very recently, for the first time ever, the UK holds more US treasuries than China. What does that mean? Well, obviously they want to help us refinance our debt, and China does not. But what does it mean? Is this a bad thing? Well, they just don't want our debt. Why? You wanted it all along, and now suddenly you don't want to help us out. Because keep in mind, when I said that they don't want our debt, they don't want US debt, that means that they're selling it. If you're going to sell that debt, what's going to happen? Interest rate is going to go up. So that's going to make it more expensive for you. We're talking $800 billion that they have. And I think just recently, UK went up like 850, $850 billion. So the UK has more, and obviously it's coincidental that they just made a deal with the US, right? So this debt thing is more than just an instrument for insurance companies to earn a good interest. It's also a game that is being played at a higher level, right? They want to, because if the US cannot refinance that debt, right? If you can't find someone to buy that debt and basically refinance it with new debt, what are you going to do? You still have to pay Medicaid, you still have to pay Medicare, you still have to pay everything having to do with Social Security, right? You can't pay, well, then you can't get the money. Be careful. This could impact us. This could impact the US in a pretty nasty way. Okay, so China doesn't want it. So they basically say, you know what, I don't really want to help you out anymore. But I really mean it this time. Forget the tariffs. I don't even want your dollars. I don't want your dollars because I don't need it. And I don't need it because, you know what, I'm going to turn around and start selling my stuff to some other people. And maybe they want it. Then good luck to you and farewell. Okay. I mean, that's kind of the idea, right? Because basically the US does not want to have a large trade deficit. Okay. So that's the thing that's happening with the debt and with the fact that UK is above China. Now, of course, the number one holder of US treasuries is, I mean, apart from us, is Japan with $1 trillion. Why do you think they hold $1 trillion? You know, we happens, the US also happens to be protecting Japan, who doesn't have an army. I mean, it is kind of coincidental, right? So China doesn't like us anymore. They don't want the US debt. Japan needs the US, so they've got the treasuries. UK wants to look good to the US, so they buy more. You know what I mean? So you need to understand that what's going on there, because the more you understand that, the more you will be able to be an informed person. As far as my channel, which is the Black Swan, I want my subscribers not so much to tell them what to do, right? Because it all depends. But I want should I buy long puts on certain stocks? Well, that's a very good question, right? Because the the way, for example, a hedge fund like Universa, with Spitznagel, well, how did he make 4,000%? How did he make 4,000% in 2020 with COVID? It was with long puts. He bought a put for next year. It didn't cost anything because they said, COVID? COVID, why? What do you care about COVID? Well, we may close the country. Come on. This thing happened in China. They wear a mask and we're done. And you see what happened? So that's a very problematic situation when you cannot control it in a way that makes everyone feel comfortable, right? So that's the thing that you could have end up happening in the US. So then what do? You buy long puts. The gains are tremendous, tremendous. Of course, if nothing happens, then you lost your money. Not a lot, but you lost the price of the put. But I told you, I've ratcheted in, and if you check my Patreon channel, I actually like 13, 14,000% annualized, literally by buying puts at the right time. But again, this is a game that you need to understand how it's played, because it is not an easy game to play. You need to know when, and you need to do why and at what level. Okay? So that's the thing that's happening with China and Japan. So there's a game being played, so be careful. Now, how do what can I do to see what's going on? Well, apart from listening to me every day on my channel, what you can do is take a look at the 10-year yield, right? If you look at the 10-year yield, that will give you an idea, and I'm going to check for you right now to tell you where we are, because this can help you a lot understanding what is going on. So, in terms of bonds right now, I'm checking my trusted app here. So, the yield on the US bond is around 4.34%. I believe that's a 10-year. So, now, one thing I'd like to say, okay, is 4.3% yield is the high, unless you want to go to Brazil, it's a very, very high yield. It's the highest yield among all Western countries, except maybe the United Kingdom, Australia 4.2, Germany 2.4, Canada 3.2, Italy 3.4, France 3.1. We had 4.3 people. Spain 3. So if you want to make money, earning on a treasury on a very safe bet, the U.S. is the best bet. So you get almost 4.5%. 44% of all bonds trades below 4%. But yet nobody, and that's another sign that I'm worried about. Nobody wants the treasury from the US, even though the US pays very well. It's the US. Why? You worried they're going to default? Is that what's happening here? I mean, these are the signs that you have to start watching. Because when I have such a high yield, I'm a little bit concerned. Now, the other thing that you should be concerned, right? You say, well, the market is going to go up, market is going to go up. Yeah, but hold on a second, right? For this year, okay, the S&P 500 this year, do you want to know what the return is? 1.6%. Wait, we didn't make any money this year. Well, the tariffs and all that. Yeah, but when you're taking equity risk, you don't want 1.6%. You're not getting paid for that. You could get 4.5% risk free technically. Okay. Well, hold on. Well, but the market and everything else, the situation globally or whatever, right? No. What's happening is if I'm looking at, let's say, year to date, right? Who's beating us? Great Britain, 7.9%. Germany, 22%. France, 6%. Italy, 17%. Spain, 20%. They are kicking it. You are better off putting your money in Europe right now. That was never a thing before. Never a thing before. But year to date, they are beating the US. When I say they, I'm talking about Western countries, right? Look at Spain is 22%. Who is doing the best? No, Spain is the best. Hong Kong 50, 18%. What about Shanghai? 0.96%. Now they're suffering, obviously. Japan is suffering also. There's a whole topic going on with Japan right now, which I will not go in it. But the point is, so the money is might be leaving the U.S. because what's happening as well is that the dollar is weakening. It's weakening because the money people are taking their money and starting to put in Europe. So we have two things happening that you need to worry about and you need to monitor very closely. The first thing you need to monitor is the fact that treasuries are going up in price and nobody wants it. And the second thing is nobody wants the dollar. And third, nobody wants to invest in the US. Oh, it's Trump's fault. Like I said, we are on a runaway train, but we have been on a runaway train for a while. You didn't pay attention because the market was up. But the national debt was on a runaway train. The fact that the US hasn't built much of important things because of the trade deficit, that has been a runaway train since 2001 when China joined the World Trade Organization. You cannot have trade deficit with countries for so long. It is not good because it depletes the workforce. You don't make anything. And yeah, you could borrow, right, to pay for it. But how long can you do that? So that's a runaway train. Let me give you other reasons why we are on the runaway train. Now, if you take a look at the credit default swap, which is basically insurance on treasuries, right? Well, what happened if the U.S. for some reason couldn't pay its debt? Can I buy protection? Can I buy insurance on the treasury? Can I do that? Yeah, you could do that. Basically, you're insuring yourself against the default of the United States. Do you realize that the cost of that insurance, like insuring your house against fire, is all the way up with Greece? Greece, people. The US is now priced with Greece. So that means that it's triple B. That means that it is riskier to invest in the US than it is to invest in Italy or France or whatever. How did we get there? It's Trump's fault. I wish it was that simple. I wish. Speak to the people who knows, and they will tell you that the U.S. has been on a runaway path that has not been good. Except the only thing that Trump did is that he went in and he broke everything, right? He said, okay, we got to do something. And people said, do what? Do we need to do something? Yes, we need to do something. We're spending too much money. Well, he didn't say too much, we're spending money. What he said is, we don't make things anymore. We have a trade deficit. You're right, right? Why you tell us that for, right? And then you start bringing the tariffs. So he's bringing it all up to the forefront, and people don't like it. They don't like it because they don't want to hear the truth. But the point is, at $37 trillion, you need to do something. Otherwise, you are in big trouble. Let's see. It's 2 o'clock your time. I didn't read the bill itself, but I could tell you that that we're going to increase the tax bill by $4 trillion. It's going to increase the amount of debt by $4 trillion. Hey, Ben Bang, how you doing? It's gonna raise the amount of debt by a tremendous amount of money, and it's going to lower taxes. Lower taxes, that's always good. Well, hopefully that by the time you get the taxes down, now keep in mind there's a few senators that are saying, no way, no, I'm not signing for this. And you don't need that many senators, right? So I could get a couple of senators, and then you're done, and you cannot do it. If you can't do that, the tariffs, remember the tariffs? We're going to get tariffs, going to get deal done every week. What do you think about Jerome Powell keeping somewhat active in the market? Well, the thing with Jerome Powell is that Trump can't stand the guy, right? He told him yesterday, actually, he said, hey, look, we got payroll numbers at 37,000, and you're not doing anything. Obviously, what he's mean by that is that if you have unemployment, and we should see the numbers coming out in 30 minutes, I guess it must be 8 o'clock in the U.S. right now. But if you can't, if you have unemployment, I mean, the economy is slowing down. And how do you bring the economy up? You lower rates, so that's easy to borrow, and you prop up the economy. But Jerome Powell is saying, I don't know. I don't know, because I don't know the impact of the tariffs. I'm concerned that the tariffs might increase inflation. Now, let me tell you what's going on with inflation right now, right? And you could look at where I look. You go to Trueflation. It's going to tell you where we are right now. According to Trueflation, which is much more accurate than the CPI, we're at 1.88%. And if I look at the first month, I mean, it reached a peak sometime in May, mid 27 at 2%, but inflation seems to be going down a little bit. So Trump might be right, just now. Of course, the reason he wants to lower the rates is again, right? You still have $37 trillion, right? You have this bullet that you're carrying with you. So Powell right now, the question is, what is he really doing? Is he saying, you know what? You don't like me, I don't like you. Let me think about it, because I know you want me to lower rates, right? So I'm not going to lower rates. No, of course he can't do that like that. What he's saying is, well, basically, I don't know what the impact of the tariffs are going to be, and he's right. because inflation is going to be a problem. Is it good idea to be long gold due to the current sentiment over the long haul? I'm expecting depreciation. Well, you're onto something here, Marco. The gold, gold is an inflation hedge, and we're going to have inflation. Why? Well, theoretically speaking, if you have tariffs, although hold your horses. I mean, we have higher tariffs, okay? I think on average we were like 3% with the entire world. I think we're close to 6, 7% with everyone, and definitely with China. So money is coming in. So you're going to have inflation. We haven't seen it yet. But the inflation is one thing, and then I see that Inquisitor Bacon is talking about the bill, and Marco is also talking about the USD, right? So if the US is losing its standing, yeah, gold. In fact, you know who's buying a lot of gold? The Federal Reserve is buying a lot of gold and making it as a hello, brother, love from India. I know, India. India, which is a circle of impurists, meaning that this is where 10% of the world lives and 50%, I mean, 10% of land mass and 50% of the world where India is, India, China. And the question is, maybe, just maybe, India and China, all these countries are going to be trading with each other and they won't need the US anymore. The thing is, if you don't be too quick of getting rid of the US, because who will the world central currency, reserve currency is going to be? China? Europe? The euro? You know, I mean, the dollar has been weakening, right? This is a runaway train. The dollar getting weaker and weaker and weaker. And why is it getting weaker? Because people don't want it. Okay. I know reason for this massive population. Our soil is best for agriculture and food production. Yes, of course. I mean, up until now, really, everyone wants to sell to the U.S., right? Because the U.S. is buying everything, and you guys are making it cheap. But how do you think the U.S. is paying for it? It's paying for it by using dollars. And what is it getting the dollars? Getting the dollars from the treasuries. I mean, we're printing money. How do you think? How do you think the Federal Reserve is going to refinance all that debt if nobody wants it? I mean, China wants it less and less. I'm not so sure about Canada. Maybe Japan will pick up more on it, and maybe. But the point is, who do you think is going to be buying it? They're going to do like they've done in the past. They are going to. Yeah, I wouldn't be surprised if they some kind of modernized gold standard. Yes, yes, because they said, listen, the dollar is going to be a problem. We're not going to have enough people interested in owning dollars. So people in China and India were making money by selling to the US, right? So, but then how did the US get the stuff? They were printing money. I mean, and then nothing is being made in the US. You cannot have a trade deficit to that level. You cannot. This is not good. You need to be able to produce. You need a balanced trade, right? Now, of course, it's not China or India's fault. I mean, the U.S. wanted to do it. Made sense. It was cheaper and people made money. But now, at 37 trillion, you cannot afford to do it. So obviously, what do? Well, this is what Trump did, which is basically, you know what? I am not going to trade with China anymore. Be careful. You have to be careful because that's going to hurt China. And if China is hurt, dollars are not going to be replaced. Just chill, American. BRICS currency not coming until China becomes friendly to India and solves all border issues. I agree with that. I agree with that because basically, uh, who's going to replace the U.S. dollar? Who's going to? No one has that stable, that kind of stability. Now I know Trump is creating instability, but at the end of the day, in the U.S. is a stable country, right? You could kind of do what you want to do, think what you want to think. There's enough people. There's enough power. I mean, well, let's address power for 1 second. China right now, I mean, I know they're making a lot of pharmaceutical products and shoes and sneakers and all that, but they also make lots of weapons. In fact, their production capacity is 6 to 7 times higher than the US. What if, you keep pissing China off by coercing them instead of negotiating, right? Coercing, give me my stuff, otherwise 145%. Well, yes, China is hurting right now. China is not in the greatest shape either. Its people are hurting. What happens if a lot of people lose a lot of jobs, right? What happens? We're going to get pissed. In 100 years, I'm expecting the US to still dominate over all other currency. We'll see, but right now, the dollar is in a little bit of trouble, if I might say so, and I could see it, right? I could see the numbers. So if you piss off China too much and it decides to suddenly, take over Taiwan, because, you just need a reason to go to war, right? I mean, Ukraine and Russia, okay, Russia wanted what? To invade Ukraine. Why? Well, you kind of were bunching against Russia a little bit too close, and you were told, don't do it, don't do it, don't do it. Now, is he going to want to invade all over Europe? I doubt it very much, but wars get started and you could see they're all building up and building up and building up, and that could be a problem, because then the Chinese people who will have no jobs because they're not, the US is they can't sell to the US anymore at full price, which is going to be great. Trump is going to say, okay, now your people are out of a job, but when you have that many Chinese pissed at you, all they need is a bad guy, and all they have to say is, you know what? It's the U.S. fault. Look what they did. Blah blah blah. Let me get into Taiwan and let's have a good. But does the U.S. really want to fight in that fashion? Because it hasn't won a war in a while. It hasn't. The U.S. hasn't. Yeah, a lot is being produced. In terms of services, that's great. Making a lot of money with that. But in terms of goods and goods, industrial production, the U.S. doesn't do that well anymore. It doesn't have as much because it outsourced everything, and that's why Trump, in a way, is correct. He's not a crazy guy. He's saying bring the stuff over. The only thing is the way he's doing it is too strong. The way he's doing it, he's pissing the people off, and they don't want the dollar. They don't want. I mean, imagine they're saying pissing people off for the normal people, right? So you're upset, so you could relate. But what's really going on is that he wants to maintain the U.S. relevancy. He wants to make sure the U.S. still remains a powerful country, because there's no sheriff in town. Everything goes, everything is off, right? And unfortunately, he only has a certain amount of time, right, before Congress gets re-voted in, and he loses Congress, and maybe loses Senate, again with the Senate. Now, of course, I will tell you one thing, my friends. Subscribe to my channel and like this video. I will tell you one thing. And don't forget my Patreon channel, which is free. I will tell you one thing. The best time, the only way to make money is to buy when everyone is selling. And right now, if I'm looking at the numbers, weekly, we are up 1% of the 500. Who's better than the US right now? Well, 1.7% for the Germans, and 1.47% for the Australians. Mexico is 1.6%. Netherlands 2.4%. Monthly, we're at 6.5%. Monthly, we're doing okay. So there's a bit of a. The big question is, if I want to make money, and now is the time to get in the U.S. with everything that's happening, be careful, because what's coming after, this is a runaway train. It doesn't stop until it hits the station. And you know what's going to hit the station? It's not the stock market you have to worry about. It's not the recession you have to worry about. It's liquidity. You need to worry about liquidity. In 2008, I remember I was there. I was trading credit default swaps in New York City. In 2008, we had no liquidity. What does that mean? There was no confidence. Once you lose confidence and nobody wants you, or doesn't want any of it, doesn't want to put money in the bank, doesn't want to put money in the stock market, is afraid, nothing happens, nobody invests, and nobody makes money, that is what you need to worry about. That is where the problem is. Now, is this going to happen? It all depends as to, what Trump is going to say next, what's going to happen to the debt, what's going to happen to rates, what's going to happen to the dollar. I don't have money to invest, so I'm fine. I'm unemployed anyway. I'm just farmer. I mean, you know what? At the end of the day, and trust me on that, it's not so much how much money you have, is as long as you like what you're doing. That is more important. Okay, so don't worry too much about these things. But unfortunately, this is not to talk just about the stock market, right? This is a talk about, are we going to have a war somewhere? I mean, because, if we have a war, that could be a problem. I mean, look, for example, what happened in India, right? India, when China and Apple, right? Apple basically doesn't pay any taxes, so they're going to have to pay some taxes here. But the point is, when Apple decided to stop making iPhone in China, because trust me, they're seeing the writing on the wall. This thing is over. Okay, this Chinese thing is over. They say, well, let me turn to India to make the iPhones, right? And then everything started to shift to India. And then what happened? They almost had a war with Pakistan. Well, that's very coincidental, is it? I don't know exactly we kind of know what happened, but this is, I can't deal with the war and deal with the US and helping out the US. This is too complicated for me, right? So, and this is what I mean. Yeah, it's question money, but it's also a geopolitical issue. I think it could impact your lives, right? I mean, well, we're not going to have a war in the US. It's crazy. Is it? Is it crazy? Was central bank buying 600 billion worth of gold? That's true. That's totally true. While selling 300 billion of treasuries suggests a strategic shift, possibly preparing for a post-dollar era. Yes, and that Marco is right. And I was talking about that before. We're buying more and more gold. They are buying more gold because why? Well, because it's a finite amount. This invites us to imagine a world where gold flows reshape economic power, with nations like China and Russia gaining influence, echoing historical patterns where gold flows correlated with dominance. You know what? I mean, the US is not going to disappear, but it might not be an empire anymore. After all, there was a Venice Empire, there was a Roman Empire, there was Spanish, there was a French Empire, there was the English Empire, and then there was a US Empire. It doesn't last forever. And you know what usually gets them into trouble at the end of the day? Is too much debt. They think they could borrow and they could print. Remember, in 1971, let's talk about gold here and the US influence where we're waiting for the numbers to come out. In 1971, Nixon said, from now on, the US dollar is not going to be backed by gold. I see, you're nuts. I mean, this is what's been since 1944. We need more freedom. We want to do what we want to do. We want to have a Federal Reserve that is under control. And obviously, at that time, Arthur Burns, who was in Nixon's pocket, and he was a Federal Reserve chairman, and he says, that will give more power to the Fed, which I own basically, and we know what happened to Nixon. And the U.S. said we're not going to back up the dollar with gold. 1971, and guess what? It worked, and that propulsed the U.S. into wow, right? Because they said, well, I guess all I need to do is have a dollar, and it is worth a dollar. Nixon was enemy to India, hate him so much here. Well, I mean, he was corrupted, and it's not me saying it. He said it himself, and he left on that helicopter in I forget the year. But the point is, he literally told them we're not going to use gold anymore behind the dollar. And what does that mean? Well, it essentially means that I could print as many dollars that I want, and it's worth what the amount that it's printing on. Imagine that, right? I mean, you wouldn't. Some guy comes around with a bunch of cruceros and say, "I want to buy a house." You say, "I don't want to take that money." If he gives you $1 million, you will take it because you know that that money, that piece of paper is worth something. But in the past, you knew it was worth something because it was backed by gold. But now, if you feel that that dollar, I'm not so sure because you guys could print as many as you want. In fact, you're going to be printing, quote unquote, through quantitative easing because you're going to need to pay off that 37 trillion, not all thing, but whatever is refinanced because China might not want to help you anymore. You have no choice. You have no choice but to do it unless, and this will be the end of the runaway train and the beginning of the black swan. Be careful, unless Trump gets pissed crazy enough to say that I will not pay it. I will default. Not, he might not do it directly, right? Like say I'm not paying my bills. He might say, well, we can't get through. What do you think about the future of info-U.S. relation, India relation? I think India, being, where mathematics were created, okay, has something to say, has something to offer. So the issue that's going to happen is ultimately no one is, the dollar is just going to disappear. I don't think so, not right away, but it's under duress. So we have to be very careful about these things. And we need to really make the market is not doing anything, literally right now, not doing anything at all. Let's see. I would love to be with you guys when the numbers come out at 8:30, and it's 2 plus 6 is 8:20. Okay, I'm in Europe, in south of France right now, but I'll be back home soon. But to watch my portfolio. But right now, so initial claims prior was 240. Expected is 235, which is that's expected claims is claims on employment, right? So you don't want that number to go too high. And then, of course, you have continuing claims also. So in less than 8 minutes, we're going to see what the initial claim. Now, this number is important here in the US, and obviously it's going to impact everyone. It was important enough yesterday when the payroll numbers came out, and it came out very meek at 37,000 versus the 110 that they were expecting. So it looks like people are expecting this, you're getting that. What does that mean? Well, not that many jobs are being created in the US. Maybe what's happening, we are getting into a slowdown. The hard numbers are coming in. Let me tell you, we haven't seen the hard numbers yet. That runaway train, when it hits, when people realize, oh my God, the US is slowing down, we do have a problem, then you're going to see the stock market reacting, because the market right now, at the beginning of the year, is not doing anything. It's just, we didn't create it. We went back up, but we didn't make any money this year, quite frankly. And that's a problem. So basically, initial claims expected at 235 and prior was 240. So we're hoping that that number drops further, so there aren't that many unemployment claims. That what that means is when you lose your job in the US, you file a claim. So if too many people start claiming they lost their job, we have a weakness. Now, when we saw the payroll yesterday, basically Trump went to his new friend Powell and said, "Stupid, too late, Powell." That's basically what he sings. So according to you, US is going to collapse. I don't agree with you, mate. As long as US say we have much hard power. No, I didn't say the US is going to collapse. No, I don't think so. The US cannot collapse, and I will tell you why. Even for the thing with the treasuries, you're saying, well, I mean, nobody wants it. Yeah, but the thing is, there's about $15 trillion worth of treasuries out there. Let me double check my numbers, but I think that's the number. But treasuries, worldwide, right? 15 trillion. There's only outstanding. There's not that many. I think it's like 15 billion or something. So, if you're an insurance company, you want to make money, right? It's not that much money for you to put you to get that kind of safety, right? So because all of it is held and not much outstanding, so that's kind of holding up, the need for treasury. So the only way the U.S. collapses really is for liquidity, meaning that they cannot refinance the debt, right? That's when it collapses, meaning that, okay, I'm refinanced 9 trillion, and say I'm not giving you 9 trillion. So what does the U.S. do? They have the ability to basically eat the Kool-Aid and issue debt and print dollars basically through quantitative easing, which they've done in the past to keep this thing going. So that's not going to happen this time. But they are warning sign everywhere that it's because when you do that, right? When you issue dollars, you print dollars, quote unquote, to basically pay for your debt. You're debasing the currency. Now, of course, you're a reserve currency. You're important, so you're able to do it. But if you keep doing it, at some point it's going to be too much. The U.S. is not going away anywhere. No, the U.S. is around. The only thing is, when you say the U.S. is around, don't you want to make money out of the U.S.? Because right now, the fact is, you're not making any money in the stock market in the U.S. You're better off taking your money, right, and sending it overseas. And that's what they did. That's what the European did, right? Because I think you have 20% in Spain in stock market, while the U.S. is 1.5%, some ridiculous amount. So that money is going overseas. You don't want it to go overseas. You want it to be here, but they don't want it. I guess you're saying, but because they don't like Trump, that's what. No, it's not that they don't like Trump. It's just that he basically brought it up and he said we need to do something, and more power to him. And the way he did it, though, I'm not so sure I would recommend. I would have done it a different way, but you had to do it. I don't know how you do it. Don't forget, the guy doesn't have 10 years to do this, right? He's got a year and a half. What do you expect him to do? He's got to coerce people to do what he wants to do. So that's the U.S. stocks heal from tariff pain, but trade news to keep market hedgy. Yeah, U.S. stock futures waver as job data looms. Right now, you're waiting, I'm waiting, the entire market is waiting for U.S. stock future waivers as jobs data looms ahead of the market wrap. Stock futures are little changed after those snap 4-day winning run. So basically, what everyone wants to know, and believe it or not, that's what it comes down to, right? One simple little bit of a number. They want to know what the initial claim is going to be. Now, if you know what that number is going to be, now if there's a big number one way or the other, you could see the market rally. If it's a big number on the way, if it's on the way up, then you could see some panic in the air. Now is the time to make money buying puts. Maybe you should be buying puts. The only problem is the market opens at 9, but you could put an order in. But unfortunately, by the time it opens, it's gonna shoot up, right? I mean, I will tell you that you can make money with puts in the options market, especially now if you feel there's uncertainty. At the end of the day, what you should be doing, not so much focus on making money in the stock market. You should be focusing on not losing any. Look at last year, right? We made a lot of money in the stock market. And where is it now? Where's Nvidia now? Where are all these people now? It's all gone, right? It was a disaster. Why? Because it's overbought. Right now, if I'm looking at the market, you're saying, well, Tesla took a beating and everything else, right? If you take a Tesla, let's pick on Tesla for a while. Tesla right now is down 2.8% in pre-markets, right? It has rallied from 250 to 350, But still, the P ratio is still 177. That is a lot. That is very expensive. I mean, I know the guy's doing great work, great job, and eventually it's a fantastic company. Still, it is a lot of money. Okay, it is 229. Here we go, people. Let's see what happened to the numbers for the initial claim. And then, here we go, 230. For you, it is 830. The number should be out right now. I don't have an update yet. If anybody could tell me, that'd be great. But we're looking at 235K. That's what is expected for initial claims. And what is the market doing? Because they probably know the number by now. The stock market now is unchanged. The number, they're digesting the number right now. The Dow is down, is almost nothing, right? When that happens, that means that nobody is making any money. Nobody wants to do anything. Everybody looks at it and they don't do anything. That's what's happening right now. And they're waiting. 91, 0.2%. That was yesterday. Oops, sorry. Right now, check chats more often. According to you, yeah, I'm checking the chats. I'm looking what's happening. I tell you about the future. I tell you about everything else. The market is not really moving. I don't see anything. It doesn't look like it's too bad right now, although the market hasn't opened yet. Okay, what's 2 plus 6 is 830. We should have the numbers by now. I think it looks green. I'm seeing green. I'm seeing green, so the numbers should be as expected. Then maybe it's not that bad. The market is recovering. It's green, people. Yeah, you see, you should have good things you didn't buy puts. Otherwise, you would have lost money. Let's see. Actual, yeah, it's. I'm seeing green. Google is up, and all these stocks are up. Let's look at the initial claims, and then I will let you go. I think it was a good session. I liked it. You had some interesting questions. And what is the initial claims? $830 expected. Let's see. And we basically, what we're waiting is we're waiting for the actual number of initial claims to get a feel as to what's going on in the economy. And I'm seeing the market reacting positively to a number. Let's see what happens next, and we should be great. You Americans don't know, but it's true US dollars are backed by a raw hard power of US. Yes, the US military, your government can't just give some threat and then we'll gain more. I mean, yeah, I mean the US has huge power. I mean, the US spends more money on its defense than the next 10 companies, the 10 next countries. That's true. But what is it really spending the money on? Is it well spent? The fact is that China does have a lot more ability to produce much quicker. But China doesn't have a system of government that, quite frankly, is welcomed by everyone. That's the only thing. Why don't I have the numbers for claims? I should have that. Let me see what the claims. You know what? Why don't we just ask ChatGPT? ChatGPT should be able to help us. Because what I want to know is what are the claims? Still nothing. Unless there's a 5-hour difference, unless it's 7:30 in the US, but I don't think so. What are the initial claims? Is the U.S. initial claim. What is the latest? Give me the latest numbers. Latest numbers. here, unemployment insurance. This is basically unemployment insurance in the U.S. I don't know, I must be missing something here because I don't see it. Expected actual. Well, anyway, you get the idea. Take a look at it, see what happens, and see you guys.